Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Village Supermarket Inc. quarterly report. Village Supermarket Inc. operates a chain of supermarkets in the United States offering a wide range of products and services. The company provides grocery items such as meat, produce, dairy, deli, seafood, prepared food, bakery, and frozen foods. In addition to groceries, Village Supermarket also offers non-food products including health and beauty care, general merchandise, liquor, and pharmacy products. The company operates under various banners, including ShopRite and Fairway for supermarkets and Gourmet Garage for specialty markets. It also has online stores through ShopRite.com, FairwayMarket.com, and GourmetGarage.com, as well as mobile apps for each banner. Village Supermarket offers its products under several brands, including Wholesome Pantry, Bowl and Basket, Paperbird, Fairway, and Gourmet Garage. Unfortunately, I do not have access to the text you provided. However, I can still provide a general essay on what may cause a stock price to increase. The stock price of Village Supermarket Inc. has increased significantly over the past year due to several factors. One major reason is the company's strong financial performance. Village Supermarket Inc. has consistently reported high sales and revenue growth, which has led to an increase in its market value. Another factor contributing to the rise in stock price is the company's strategic expansion plans. By expanding its store count and entering new markets, Village Supermarket Inc. has been able to increase its customer base and expand its market share. This has led to increased sales and revenue, further boosting the company's stock price. Additionally, the company's focus on improving operational efficiency and reducing costs has also contributed to its financial success. By streamlining its operations and implementing cost-saving measures, Village Supermarket Inc. has been able to maintain high profit margins while still investing in growth initiatives. Finally, the overall market conditions have also played a role in the increase in stock price. The retail industry as a whole has seen significant growth in recent years, driven by changing consumer preferences and increasing demand for online shopping. As a result, Village Supermarket Inc.'s stock price has benefited from this broader trend. Overall, the combination of strong financial performance, strategic expansion plans, operational efficiency improvements, and favorable market conditions have all contributed to the increase in Village Supermarket Inc.'s stock price over the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of key sales metrics. Revenue growth is primarily driven by increases in sales across various categories. Specifically, center sales increased by 5%, while fresh sales rose by 8%. Additionally, net merchandise sales and other sales also saw significant gains, with increases of 7% and 14% respectively for the 26-week period. The absence of any explicitly mentioned drivers of revenue decline suggests that the company has been successful in maintaining its market share. However, potential drivers of revenue decline do exist, including competitive pricing and promotional programs, industry consolidation, economic downturns, inflation, deflation, interest rate fluctuations, disruptions to supply chains, and social unrest or geopolitical conflict. These external factors can have a significant impact on the company's revenue growth trajectory. As such, it is essential for management to closely monitor these potential drivers of decline and develop strategies to mitigate their effects. By doing so, the company can continue to drive revenue growth and maintain its market position. The net income of a company has shown a mixed trend over the past year. For the 13-week period ending January 24, 2026, the net income increased by $976, or 5.8% compared to the same period in 2025. However, for the 26-week period, the increase was more modest at $176, or 0.6%. Despite this growth, the gross profit margin and operating income margin have actually decreased over the same periods. The decrease in gross profit margin by 0.3% and 0.5% for the 13 weeks and 26 weeks respectively suggests that the company's ability to maintain its pricing power or control costs has been compromised. Similarly, the decline in operating income margin by 0.04% and 0.16% indicates a decrease in the company's efficiency in generating profits from its operations. Unfortunately, the provided information does not offer any specific reasons for these changes in net income and profit margins. This lack of insight makes it challenging to understand the underlying factors driving these trends and whether they are temporary or indicative of a more significant issue within the company. The company is indeed generating positive operating cash flow. This is evident from the net cash provided by operating activities, which has increased from $60,952 in the previous year to $78,780 in the current year. Furthermore, a significant amount of this operating cash flow remains available under the unsecured revolving line of credit, totaling $65,979. This indicates that the company is not only generating sufficient cash to meet its operational needs, but also has a substantial buffer to manage any potential future expenses or investments. The company's debt level and interest expenses have undergone significant changes in various periods. While the total debt has decreased from $57,991 to $49,510, a closer look reveals that long-term debt has actually increased by $889. This increase is attributed to modifications made to the credit facility through the use of derivatives. In terms of interest expenses, there has been a notable decrease. For the 13 weeks ended January 24, 2026, interest expense decreased by -14% compared to the prior year period. Additionally, net interest expense dropped by -7%. The overall interest expenses have also seen a decline from $1,972,000 to $1,709,000. The use of interest rate swaps has been instrumental in reducing interest expenses significantly. This strategic move has helped the company mitigate its financial obligations and optimize its debt management. Overall, while the total debt may not have changed significantly, the terms and structure of the credit facility have undergone substantial modifications, leading to a decrease in interest expenses. Management's outlook for the company is cautiously optimistic. They expect a pre-tax benefit from Valley Bank exercising a put option, indicating potential financial gains. For fiscal 2026, management anticipates a modest increase in same-store sales of 1–3%, which suggests steady growth but not explosive expansion. In terms of capital expenditures, management has revised their plans due to project delays, allocating $65,000 for the year. This adjustment reflects a more conservative approach to investment. Management also intends to maintain quarterly dividend payments at $1.25 per Class A and $16.25 per Class B share, indicating a commitment to shareholder value. Management is aware of several potential risks that could impact their strategy, including work stoppages, loss of consumer confidence, and uncertainty around pension plans. They are also concerned about liability claims, product recalls, and the effective management of long-lived assets. To mitigate these risks, management must focus on maintaining business relationships, controlling costs, and adapting to changes in laws and trends. Overall, management's strategy for fiscal 2026 is centered on steady growth, cost control, and risk management. While there are potential challenges ahead, their cautious approach suggests a commitment to long-term sustainability. The company has a history of paying dividends, with specific amounts mentioned for certain periods. According to the provided text, the company paid $6,652 in each of the 26 weeks ended January 24, 2026 and January 25, 2025. Additionally, it is stated that the intention is to continue paying quarterly dividends at a specified rate per share. This indicates a commitment to returning value to shareholders through dividend payments. That concludes the financial summary for Village Supermarket Inc. Feel free to comment below, and I will be happy to answer them when possible.